as Tesla stock has plummeted by over 10% due to a massive sell-off since the first quarter results were announced. So, the question on everyone's mind is whether Tesla has gone too far with their price reductions. In my previous video just a few days ago, I had shared my thoughts on how electric cars are bound to become more affordable, but it's surprising to see that Tesla has already lowered the prices of their Model 3 and Model Y in the US market by up to 9%. So, if you don't want to miss any of these incredible updates, keep watching the video. Tesla's massive stock sell-off. Tesla's stock experienced a significant sell-off, falling over 10% following the company's first quarter results announcement. Analysts attributed the decline to the company's revenue falling short of expectations and lower than expected gross margins. Additionally, the global chip shortage has impacted the entire automotive industry, including Tesla. However, many analysts view the sell-off as a short-term setback and believe the company's long-term prospects remain promising. Tesla is known for its volatile stock prices, and the company has several promising projects in the works, including new models and expansion plans in China and other international markets. Despite the recent sell-off, Tesla's commitment to innovation and sustainability is expected to drive growth in the coming years. Tesla's price cuts for Model 3 and Model Y in the US market. Tesla recently announced significant price cuts for its Model 3 and Model Y vehicles in the US market, offering discounts of up to 9%. While this move is expected to boost sales, some industry experts wonder if the company has lowered its prices too much. The price cuts come as competitors ramp up their own electric vehicle offerings, and Tesla seeks to maintain its position as a market leader. However, some analysts worry that lowering prices may impact Tesla's profitability, especially as the company faces supply chain challenges and rising material costs. Despite these concerns, Tesla's price cuts are likely to make its electric vehicles more accessible to a wider range of consumers and could ultimately drive increased demand and market share for the company. Tesla's Q1 financial results. Tesla's Q1 financial results, released in April 2021, disappointed investors. The company's revenue was up 74% compared to the same quarter in 2020, but fell short of analysts' expectations. Additionally, the company's gross margins were lower than expected, causing concern among investors about the company's profitability. Some factors contributing to the disappointing results include the global chip shortage and challenges with supply chain management. However, despite these setbacks, Tesla remains a leader in the electric vehicle market and continues to invest heavily in research and development. Good news in the earnings report. The company reported a record number of vehicle deliveries with over 180,000 vehicles delivered in the quarter. Additionally, Tesla's energy business showed strong growth, with solar deployments increasing by 163% year-over-year. The company also announced progress on its new factories in Texas and Germany, with plans to begin production later in 2021. These developments bode well for Tesla's future as the company continues to expand its offerings beyond electric vehicles and invest in sustainable energy solutions. While the Q1 financial results may have caused concern among some investors, the positive news in the earnings report indicates that Tesla remains a leader in the industry and is poised for long-term growth. Considerations for Tesla buyers: resale value, timing, and Tesla's price reductions. If you're currently in the market for a car, it's important to keep in mind that the resale value of your purchase may decrease over the next 1 to 2 years. This is something that those who bought cars early last year may have already experienced. While purchasing a Tesla now for long-term use could be a good idea, if you don't urgently need a car, it might be wise to wait for further price reductions. It's possible that Tesla will lower prices again, especially around June of this year, if sales continue to lag. While some people believe that Tesla is a compassionate company that reduces prices when their costs decrease, it's essential to remember that they are ultimately a for-profit business. The price reductions are likely a way to balance supply and demand and avoid inventory issues during an economic downturn. Tesla lowers prices again. If If you're thinking of purchasing a Tesla Model 3 or Model Y in the United States, it's good to know that the company has recently reduced prices by $2,000 to $3,000. This could even cover the cost of installing heat insulating film for the whole car with some money left over. However, it's worth noting that the federal subsidy has also been reduced by $3,750, making it slightly more expensive than for those who received their car before April 18th. The Model 3 RWD version is now officially priced below $40,000, but the Model 3 Performance version has not seen a price drop. On the other hand, the Model Y Performance version is only $1,000 more expensive than the Model 3, making it a more appealing option for those in need of more space. So, is Tesla's massive stock sell-off and price cuts a good or bad sign for the company? It's hard to say at this point, but one thing is for sure, Tesla is always pushing the boundaries of what is possible in the electric car industry. Whether Tesla's recent actions are a good or bad sign for the company's future remains to be seen, but one thing is certain, Tesla is always at the forefront of innovation, and we can expect to see more exciting developments from the company in the future. And that completes our video for today. We hope you enjoyed learning the incredible updates of Tesla. Which of them are you most excited about? Tell us in the comments below. Thank you for watching. Don't forget to like this video and subscribe to Tech Bros for more content such as this.